What's up, guys? I hope everything is working. Let me double check. Okay, so let's go, boys. We start with the high time frame analysis before we go into the analysis of New York session. So on the high time frames on a weekly chart, we have these are relatively equal lows, which may be the target for 2026, beginning of 2026. But right now we swept this sell side liquidity right here. We didn't close strong. We only were able to wick down to the downside, took our sell side liquidity, but closed above this sell side liquidity pool. So yeah, the weekly looks rather bullish. We also have this volume imbalance, as you can see right here, and we only had sell side delivery, which means this is inefficient in buy side delivery. So I expect this week or next week, or in general, they will lay a bullish up close candle on top of this green shaded weekly volume imbalance. So my bias for this week is rather bullish. Now dropping down into the daily time frame. As you can see, the weekly low looks like this on daily. Swept sell side liquidity, reversed at this daily premium wick low to the tick, and now we are trading towards the weekly volume imbalance right here. So what happened today is during a London session, now this is actually a suspension block, so you have to include the volume imbalances above and below this fair value gap. So today we were only able to trade down to the suspension block midpoint consequent encroachment. Not even we were actually not able to trade down to the consequent encroachment, but we failed to go down there. So this is actually a sign of strength, which supports our bullish trading idea for today. Okay, so yeah, let's drop down. The 1 hour isn't looking too bullish. What we have is this volume imbalance right here. Oops. Same with the weekly volume imbalance. We only were able to deliver sell side. So now this is still inefficient in buy side delivery. And as you can see, okay, now we are actually trading towards it. So yeah, we are kind of late. We are already 7 minutes into the New York opening. So let's speed it up. Yeah, let's just drop down into the 5 minute. So we have London high right here. London high. Now let me delete the daily suspension block. And we have London, no, midnight opening range low. Okay, not opening range. This is 12:35 low. So yeah, sell side liquidity, buy side liquidity. So let's go down into 1 minute chart. Yeah, still relatively equal highs. So our aim, our bias is that we go for these relatively equal highs, and this 1 hour volume imbalance right here. And yeah, we are already doing that. Let's just go from electronic trading hours to regular trading hours, and now we can see we have a huge opening range gap, a discount opening range gap, and we closed below these relatively equal lows that we see here on RTH. So sell side already has been taken out. Yeah, let's see. So now we have several concepts that would support our bullish idea. We have a discount, a gap, which means 70% of the times price is going to trade up or down to the opening range gap midpoint until 10 a.m. So this also supports our bullish idea. Okay. Now I guess we have to wait and see what the market is going to give us. Mm-hmm. Let's go back to electronic trading hours. So we are still trading in this range. What I like to see, what I would like to see is sweeping sell side liquidity, and then shifting to the buy side, going for these relatively equal highs. So this is the trading plan, game plan for today. So let's see. Let's delete the opening range gap quadrant levels, and we only have buy sides and sell sides. Okay, pre-market high here already taken. So we are probably going for these relatively equal lows, and ultimately maybe also the sell side liquidity. Um, Normally this would be the first presented fair value gap right here. But for those of you who are like more advanced, ICT once said that if you have a back and forth in the same area where a fair value gap formed afterwards, that means that actually this price range is already efficiently delivered. So this inefficiency is not actually inefficient because we had this back and forth before at the same price level. So I would rather take this one as the first presented fair value gap. And yeah, pre-market lows taken out. Now we see this would actually be enough. But this sell side is obviously very close to this one, so we might see another move lower to take out this sell side liquidity. Yeah, we'll see. Okay, so you can see all the opening range gaps from the last like 6 days or whatever. That's the current opening range gap. We traded down into Tuesday's opening range gap or Wednesday's opening range gap from last week. Okay. New week opening gaps. Oh no, this. So here you can see new week opening gaps. Let's go into the 5-minute chart. And yeah. Okay. Nothing really interesting right here. Here's this current week's new week opening gap, but it's a very small one. So yeah, we are still ranging inside of this new week opening gap. Yeah. Okay. Okay. We were only able to wick through the sell side liquidity, and this rejection block from this candle actually rejected, which means that this candle, these two candles closed above this candlestick's rejection block, which is a bullish sign. And as you can see, we see a market structure shift. Maybe if we can close above this first presented inverse fair value gap, that would be great. But personally, this is too volatile for me. If you measure these candlesticks, one candlestick 40 points, okay? And yeah, I could not frame a trade or take a setup here to the buy side, because if I would go long, okay, maybe I would predict something like this, okay? We were able to close above, but yeah, we may go straight to buy side liquidity without reversing, but I would rather see price trade down into the first percent of fair value gap, stay in the upper half, and then be supported by it, and then go to the buy side. That's what I would want to see now. Okay, we have the market structure shift. Let's grade this. Oops. Let's grade this fair value gap. Okay, so we want to see price stay in the upper half. It can wick into the lower half, but the body should close in the upper half. And if it stays like this, if the body closes right here above this quadrant level, upper quadrant level, this will be even more bullish. So yeah, we'll see. We'll see. Okay. Price bodies were not able to close below but stayed in the upper half. This is what we want to see. Now we want to see strength, bullish candles, up close candles. We are also the lower quadrant. Oops. Lower quadrant of the opening range gap. So I would definitely see price getting into or trading towards the consequent encroachments inside of the 9:30 to 10 opening range window. So we still have 10 minutes, and this is what we probably would see now. And maybe we can take a trade. Maybe we can. Yeah. Okay, I would have preferred if we would have seen a fair value gap right here. Technically, you could have taken this as an entry, order block right here, stop loss below the order block, and target the opening range consequent encroachment level. But yeah, I always use fair value gaps to enter on order blocks. I'm not my model personally, so that could be a setup for you. Not saying that you should take this trade. I'm just sharing my opinion with you, what I'm thinking, what is likely going to happen. So this is not financial trade advice. This is just me sharing my opinion, guys, okay? Always, yeah, important to mention. Okay, so now the chart is 2. Okay, looks better like this. So wick down into the inverse first percent value gap. Body's closed here. We are inside a macro time window. Opening range gap, consequent encroachment right here, where the target profit is, the take profit is. And we have this 1 hour volume imbalance right here. So let's see. Buy side just ahead of price. So we should now actually see speed, because buy side liquidity is really close, and smart money would not let the retail trader any time to remove their stop losses or remove the buy stops right here. So it just could like go like this and stop them out. But yeah, there it is. Okay. Opening range gap, consequent encroachment right here. Okay, maybe we do just like this, and then we do no. Yes. Okay. Now I can do this one. And okay, perfect. Guys, I'm not in a straight. I'm just predicting this to pan out, and I actually, or definitely likely that this trade would pan out. The reason why I didn't take this trade is because I don't usually take order blocks to enter on. I just only trade value gaps. Not only, but most of the times. Yeah, and there it is. Trades called out live. Predicting, not reacting, guys, okay? Perfect delivery. Oh, it's cool, man. Okay, there it is. So now, where could it go to? Um, yeah, buys for today's session already delivered. So of course we have the opening range gap that we could close. So another potential 100 point run. take out this buy side liquidity right here. Yeah. But honestly, in my opinion, I would be content. That would be it for today, for today's London session for me personally. Beautiful 2-to-1 trade predicted and TP hit. And as you can see, how price is rejecting at the consequent encroachment point of the opening range gap. So we might see a retracement lower right now. Okay. Okay, so let's go back to daily. As I told you in the beginning, my bias is that we lay a bullish weekly candle on top of this weekly volume imbalance in order to efficiently deliver, because the weekly only has sell side delivery. Now we need buy side delivery. So as I told you in the beginning, we are definitely bullish. So we might even we might see a run into the daily volume imbalance. Yeah, so is that realistic for today's London New York session? I mean, took our buy side, already delivered opening range gap, consequent encroachment point, and this 1 hour volume imbalance. Yeah, so now I would just say let's just tape read and see what the 10 a.m. to 11 a.m. silver bullets would provide us. Okay, so now let's delete the buy side and this one. Okay, so price got supported from this fair value gap right here, which is actually not too bullish, because if we would be real bullish, we would just continue pushing higher without even retracing into this fair value gap, maybe into this fair value gap, but we would want to see a breakaway fair value gap. So now there is not a breakaway fair value gap because we filled all of this portion in. This fair value gap got completely traded into. So yeah, we'll see. Another potential auto block. And again, this is nothing I would take along on because we have no objective on the upside. Liquidity already taken out. Yeah, okay, we have this liquidity pool right here, but nothing I would be aiming for. We have no new week opening gap above that we could aim for, or new day opening gap we could aim for. So yeah, as I said, just tape reading now. Bias already delivered. Okay, so maybe we can just hop back into the 1 hour chart and monitor this 1 hour busy CB fair value gap and see how far we can trade into this. And we can see we were able to trade above consequent encroachment point, but look where the body's close. So yeah, maybe we just monitor the 1 hour consequent encroachment point and a 1 hour volume imbalance. Okay. Imbalance. Let's go back into 1 minute. Okay. Yeah, like I told you, we didn't leave or break away for a value gap, so probably are now going to maybe retrace further or even potentially see no, okay, since our bias on the high time frames is bullish, I wouldn't want to see these lows be taken. So yeah, I would say this is maybe just a deeper retracement. Maybe. We'll see. Okay, so took out this short term low. Got rejected off of this 1 hour SIBI consequent encroaching point. So now we are consolidating or what? Hmm. Okay. Maybe just turn the lights on. So, fair value gap, low, high, lower, low. This is going to be a breaker. Let's delete the 1 hour volume imbalance and the 1 hour CB. Breaker. So the reason why we had this retracement was we took out this buy side liquidity and we were not able to continue higher, leaving a breakaway fair value gap behind. In fact, price redelivered down into this fair value gap, which is not a sign of strength. Then we took out the short-term high, had a deeper retracement, closed above or at the fair value gap high, and now we may see a market structure shift again. So we are trading now at Friday's first presented fair value gap of the New York session. So what I would like to see is, in order to continue bullishness, we should see this high get taken out and using this fair value gap as an inverse fair value gap. But yeah, looks like we are going sideways a little bit, some time distortion. Always difficult to say when time distortion, when consolidations, and oftentimes, or most of the times, you see consolidations right before, or right before macro time window. So let's say if it wouldn't be 10 past 10, but 10:40, and we would see a consolidation, that would just mean that that the price is just going sideways in order to build maybe some more liquidity, engineer more liquidity in order for the algorithm to create some more sentiment. And then during a macro time window, you see some kind of a sell side sweep when bullish, and then a reversal or another expansion. So now it's 10 past 10. Let's wait for 10:30, then the first hour after 9:30 opening. is over, which starts another macro. Okay, so now high is taken out. In order for a bullish continuation, we want a bullish up close candle close above this high. And using this Friday's first presented New York fair value gap as support, like an inverse fair value gap. That's what I would want to see. If we are continuing bullishness. But okay, let's go back to the daily. Currently we are trading inside of this daily bullish busy fair value gap. So if you monitor that daily fair value gap, we fell short of this consequent encroachment point, which is also nothing bullish. Let's see. Okay, looks rather bearish to me. Friday's first percent fair value gap high traded to close below consequent encroachment point. SIBI fair value gap. Maybe we could see another retracement down into the first percent fair value gap. Maybe. Still using this fair value gap right here. So if we were in fact a bearish now for a short period of time, you would want, yeah, exactly, to see this consequent encroachment midpoint of this fair value gap be traded to only by the bodies. Bodies should close at or below the midpoint, which we did. Wicked higher, which is permissible. So if we were bearish now, you would like to see a quick movement lower, which would create an order block right here. Okay, as you can see, price didn't close strong or didn't close weak yet. Wicks higher into fair value gap high. Oh, we had a volume imbalance, little volume imbalance right here. If you can, yeah, you see this one. Okay. Yeah, basically we are going sideways right now, so it just could be a mess. If we break out higher, we will grade this consolidation from low to high, and if we are able to break above this high and close above it, in order for price to keep bullishness, you wouldn't want to see price coming back down, closing below this consequent encroachment point. So if we trade or continue higher, we would want to see something like this. Come back down, don't close. We could wick below this consolidation equilibrium point, but price should find sensitivity at the upper quadrant or midpoint and then continuing higher. That's what we want to see if we are able to break above and close above this high and continue bullishness. Yeah, bro. Unfortunately, no fair value gap right here. Could have taken this order block to 222 opening range gap, consequent encroachment points. Predicted that, called that beforehand, but yeah, no fair value gap to enter on. Wigged several times into this order block. Took out buy side. And now we are going sideways. Nothing happening too crazy right now. Just boring. Boring price action. So we are trading inside of Friday's opening range gap. We're not able to close below this consequent encroachment point. Found sensitivity at the lower quadrant. So this looks rather bullish to me right now. Also, order block. So this order block keeps price above. If price breaches and disrespects this order block by trading below its low, then we could see some measure of sell side be taken, or at least having a deep retracement. But for now, as I told you and as I predicted it, sell side taken, then buy side got taken. Buys for today's New York session already been delivered. So yeah, predicted this trade beforehand, before it happened. So if you have taken this trade, just be content for today's London session. As you can see, just going sideways right now. Waiting for 10:30, maybe we see another volatility influx at 10:30. We'll see. Bro, I'm tired. Leg training was too tense. Bro, I hate leg training. Leg training at the beginning of the week is always, bro, it's horrible. It's fucking horrible. Legs are hurting for at least next 2-3 days. Okay, so now we see price retracing down into this order block a little bit deeper. Also, inverse first percent fair value gap right here. Now the reason why I predicted also this not being the first presented fair value gap, but this one being the actual first presented fair value gap that is going to be used later in today's New York session is because, as taught by ICT, this would have been a valid first percent fair value gap. It's 933. Okay. The reason why this is not a first presented fair value gap is because we also had back and forth at this price area right here, and the inefficiency that formed or was created right here is at the exact point or area where we had this back and forth trading before. So this is actually not inefficient. So this is not an inefficiency that we want to be using in the future, but this is, okay? So this is why I'm looking at this fair value gap as the first presented fair value gap. And obviously the algorithm is rather using this one, as I told you, and not this one. Okay, so we got supported, or we have a bullish reaction off of this candlestick, or no, we actually failed to trade down into this most sensitive candle of this order block. The lowest down close candle in a bullish scenario, which is an order block, is the most sensitive candle of this entire order block. But if we are really bullish, you have to imagine it like fair value gaps. In order for this inverse fair value gap, as I also outlined beforehand, we want price to trade through it, and the body's only closing in the upper half and not closing below, and wicking further down below this consequent encroaching point. As I told you guys, is permissible, but we want price to mainly stay in the upper half, which we did. And this is indicative for bullishness. And as we can see, we had this bullish run higher that we framed our long right here on. Okay, so same thing with order blocks. If actually bullish, you wouldn't want to see price trading down below the midpoint or mean threshold of this order block, which consists of these two consecutive down close candles. That would be bullish. And in fact, we were not able and failed to trade down to the mean threshold of this order block, which is indicative for bullishness. Not saying that the only option now is to go higher. I'm not saying that, but these things like this increase the probability for price going into your favor. Okay, so yeah. So yeah, why do I use only the bodies for grading and not also the wicks, which you also could? It's, how do I explain that? So ICT didn't give an exact explanation when you use the high and the low, or when we use the bodies for grading or for general use of order blocks. But what he said was, if you have a body with like a small wick, like, I don't know, maybe, let me see. Okay, I don't find an example, but let's say if this candle's wick was only like this big, like maybe 2 handles or something, then ICT would just take the open of the order block. If it is, in fact, if this candle has a big wick, you are more likely, or you should rather take the wick as the order block high, as the order block level. So it's kind of difficult to have a strict rule when to use the high level or when to use the open level for grading order blocks. Maybe it's just intuitive or experience. I don't know how to explain it, but yeah. So traded down into the order block even deeper, failed to trade down into the first presented fair value gap. Yeah, guys, right now, as I told you, buys for this New York session already has been delivered, and now my bias is kind of neutral. So we're taking out buy side liquidity. This could be considered as unfinished business, as ICT taught in the later part of the 2025 mentorship. We also have this midnight opening range. Yeah, opening range. Not exactly in the opening range, but 12:38 a.m. low, which I actually don't want to be taken out because my overall high time frame bias is rather bullish. So I would be looking for bullish objectives now, because this week, if you look at the weekly charts, we have this weekly volume imbalance, which only had a sell side delivery. So that means, according to ICT, that this volume imbalance is still lacking and inefficient in buy side delivery. So we actually want this week to be a bullish up closed candle laying on top this volume imbalance in order for this price level, this volume imbalance to be efficiently delivered. So this is the reason why my bias is bullish on the weekly, and on the daily we close above this, or we close at the fair value gap high level right here, close at the high level, and we still have this weekly volume imbalance and these relatively equal highs, which might be taken out in the next couple of days maybe. So yeah, still price failed in today's London session to trade down into the consequent encroachment point of this daily busy fair value gap, which is also bullish. So on the weekly and the daily, we have only bullish signs as of yet. So yeah, maybe let's just see what the 15-minute chart gives us. So Friday we traded higher, closed around here. We had a little fair value new week opening gap, a tiny one, traded up, manipulated to the downsides, traded into the daily busy fair value gap that I showed you. And yeah, New York session opening up here, taking sell side, then going for buy side, trading up into the first percent fair value gap from Friday's New York session and got rejected from the high level. Yeah, and as I told you guys, if we breach this order block, that would be like the last line in the sand for bullishness for the 10 to 11 hour. And now we rather want to see this first percent fair value gap to be used as a reclaimed bearish fair value gap. So now we want to see price close below this green shaded fair value gap and use it as a reclaim fair value gap. This would be an order block. So this order block should hold price lower. Yeah, but we weren't able to close below the first percent fair value gap, which is what you would want to see if you want to go for shorts. So yeah, now trading through this order block. So this order block got disrespected. Yeah, it's difficult to say what price is going to do now. We're unable to close below it, so not looking too bearish, but it's also not looking bullish. Taking out buy side and sell side. So to be honest, I don't know what price is going to do now. Just tape reading. This trade would have been enough for today for me, guys, okay? Called it beforehand, predicted it. TP as consequent encroachment point of today's opening range gap, delivered perfectly within 3 to 4 5 minutes, 2 to 1. Beautiful trade. So now let's see what price is going to give us now. Okay. So in fact, we actually efficiently delivered this 1 hour volume imbalance, which was the target for today's New York opening range, or today's New York session, which, as I told you guys 2 minutes ago, has already been delivered. So this is now being efficiently delivered. Why? Volume imbalance, inefficient, void of all trading, neither has it buy side or sell side delivery. So volume imbalance, traded higher. Now we had sell side delivery right here. Still inefficient buy side, which is the reason why I predicted price going into this 1 hour volume balance again, which we did. So yeah, as I told you guys, honestly, I don't know what price is now reaching for. Obviously, high time frame bullish. We want to see price go higher, but I wouldn't say it's realistic to expect a move towards this high in today's New York opening, in today's New York session. So yeah, just tape reading. Okay, we have graded this consolidation, price traded down, up into the equilibrium, but didn't trade up into it. It failed, as you can see. Let's delete the 1 hour volume balance. Trade up into this fair value gap right here. And close below the consolidation lower quadrant level, which rather looks bearish to me. This is the exact scenario that I was outlining for you guys like 20 minutes ago for a bullish scenario. I told you, I said, if we took out these lows and then trade higher, breaching or shifting, having another market structure shift higher, closing above this high, then what I would want to see is price only being able to trade down, but not being able to close below this consequent encroachment or equilibrium of this consolidation, and find sensitivity and then continue further bullish. That's a scenario I outlined. What should happen if we close above these highs. But we didn't. In fact, we did the exact opposite. Okay, we closed below, retraced up into it, failed to trade up into the equilibrium point, found sensitivity at this consolidation lower quadrant. So if price would want to aim or target for these lows. It should stay below it, below this lower quadrant level. Okay. Now price used this fair value gap as an inverse fair value gap. Bro, my hands are freezing. It's cold, man. Huh. Okay, price closed at this order block. Open level. Which might turn into a breaker if we trade below it. Price staying still inside this consolidation range. So now we are approaching the macro. It's 10:46, 10:50 to 11:10 macro in 4 minutes. Price still not able to close above this consolidation. Lower quadrant only wicked through it. Probably reached up into the lower quadrant, yes, of this wick. So yeah, still looks rather bearish right now. Nothing tradable for me personally right now. Nope. Macro and 45 seconds. Macro starts. Okay, so what is price actually doing? Price has two options. Okay, it either trades up or down into a liquidity pool or into an inefficiency. These are the two options price has according to ICT. Okay, so we traded down into sell side liquidity, moved higher, used this inefficiency, and went from inefficiency to buy side liquidity. Took liquidity, went back down into an inefficiency here and here, and now is looking for liquidity. So, what liquidity is it looking for? Told you buys for the day is bullish, high time frame buys also bullish, so we rather want to look for bullish setups or longs. Price now able to maybe close above this constant encroachment point. Yep, close above. Order block beautifully respected. Now we take this high. Okay. So now you don't want to see a price closing below this midpoint right here, okay? These two fair value gaps should stay unfilled. At least this one shouldn't be traded to. And if price retraces down, you wouldn't want to see price repricing all the way down to the fair value gap low level, okay? Best case scenario would be just continuing higher or retracing and just using the upper half of this fair value gap, or at least on a closing basis, okay? That's what I'm that's what I'm looking for right now. But yeah, nothing tradable personally for me now. We don't have a buy side objective. We have nothing to reach for from my point of view. Okay, and I don't like to trade when market is in discovery. Okay, and it technically, in my opinion, is because when is price in discovery, that means it we have no objectives in this scenario on the buy side. We don't have like a new week opening gap that we could aim for, a new day opening gap, or oh, okay, maybe we could actually be aiming for this opening range gap high level. Okay, this would be the only objective we would have on the upside. It's just regular trading hours buy side and this opening range gap high level. Okay, so maybe if we form another order block here, maybe what I would want to see is an institution order flow entry drill for price. Let's select this one, staying in the upper half of this, creating a down close candle, also using Friday's first presented new fair value gap, and then trading higher, retracing down into the order block, and then going for the opening range gap low level. So it would look like this. Trade down into order block again. Bam, higher. That would be another valid trade setup for today. Okay. Still no institutional order flow entry deal. Price wick down, but didn't reach down into the fair value gap, but it failed. Okay, this is in fact bullishness. Okay, as of yet, price is leaving this fair value gap open. Could still trade down into it. We see. Okay, I think if we do get an order block here, trade higher and retrace down into the order block, maybe I think I would take it. Let's see if price provides us the opportunity. Okay, 10:58. For me personally, I don't take setups after 11 a.m. So looks like we don't get an opportunity. Nope. Maybe now? Stair stepping higher. Bro, come on. What is this? Okay, 11 a.m. Do we get a retracement? I think so. Maybe not. Okay. I would say I end the stream now. Bias was already delivered today at about 10 a.m. We had some sideways movements, and now we were trading and continuing high now. What could happen is what I outlined a few minutes ago, a retracement down into this fair value gap, leaving this fair value gap or the lower portion, lower half open, and this one also open, using this last Friday's first presented fair value gap from the New York session, and then going high again. That would be a scenario that I would be taking if it wasn't already 11 a.m. So if it was in the 10 to 11 silver bullet time window, I would have taken it. But yeah, for you guys, just to tape read and maybe also to journal, I would be looking for a retracement and a continuation higher. But I guess that's it for today, guys. And I would say I'll catch you in the next live stream. Be safe.